What's up? What's up? All right. Hey, what's going on? This is Simon from W3MCT. We're going to go over the market right now and get you prepared for these upcoming plays. Currently, when we look at the entire market indicator, this is a total crypto market cap, and it uses this to analyze the proportion of the bullish to bearish according to the token metric grades. And so the percent of bullish token metric grades right now is actually a little bit low, right? So we're down to 9% on the percent of bullish, and the total crypto market cap is at $2 trillion. So when we look at the token metrics grade signal, we were signaled back in April, the beginning of April here, April 2nd, right, that we were going bearish, okay? At that time, the market was at 2 points. And so right after the bearish signal, right, you can see that the market cap went all the way down to 2.4 trillion. So this bearish signal really helped us out because it prepared us for, look, I mean, yeah, so 2.6, it went up to 2.8 trillion, right? And then boom, then that's when we had the pullback there. And so you may say, well, why didn't it go off here? Okay, that's irrelevant, right? So we want to get out close to the top. We're not gonna, get out at the very, very top, but this extra 200 billion, right, from the 2.6 to the 2.8, I mean, look, you can try to trade that. This doesn't mean you have to exit your position immediately, but it is a signal to let you know to at least start paying attention and maybe start to trim. Okay, and so use token metrics because it gives us really good data sets. You can see when we go back to the beginning of the, later last year in October, right? We got the bullish signal October 21st, 2023. The total crypto market cap at that time was at 1.2 trillion. And we had a nice, amazing uptrend right here all the way to 1.7. Okay, we had the bearish signal at 1.8 go, okay, at 2024. So we had a nice good, from October to January here, really good end of the quarter. The bearish signal went off. It saved us a little bit, right? Because we went down from 1.9 trillion, okay, to 1.6 trillion. So we had a nice little pullback here. And then when we got back to 1.9 trillion here, we got the bullish signal again, all right? Now, could we have, got in around here the 1.7 and the 1.7 or so during this consolidation phase? Yeah, absolutely. But at the same time, if you want to wait for the signal first, it's okay because you still can see that we went from 1.9 trillion all the way to 2.9 trillion, a $1 trillion increase in the total crypto market cap. And it wasn't until we got the bearish signal here at 2.7, saved $1 billion, right? The bottom on 2.4 trillion, nice little bounce back up to 2.8 to 2.8 trillion. And then when we came down to 2.6 trillion, right, this was the beginning of the pullback, right? So here in the total crypto market cap, we're actually having a lower high, right? So we had a 2.9 trillion, okay, a 2.8 trillion, okay, 2.8, 2.7, and then that's when we have the pullback. And then here we are today, currently April 27th. Okay, we are actually getting the first indication of an increase, right? So we have a higher low in the total crypto market cap. Nice little double bottom here on April 13th, okay, and April 18th, all right? Well, we did 4 trillion, 2.3, and then back to a 2.4 trillion. So this could be a great inverse head and shoulders pattern that's occurring here on the total crypto market cap. So we're currently sitting right now at 2.5 trillion. And it looks like we probably won't see the bullish signal go off until we reach about 2.8 trillion or so for the total crypto market cap. As we continue going down, the percent from bullish to bearish, what does this mean? So this is going to help us on the frequency trend signals, right? This is the breakout strategy that analyzes how the coins are trading and whether they're above or below their monthly highs and lows. And the low frequency trend analyzes the tokens on their bullish to bearish signal from their token metrics low frequency visual trend strategy. There's a lot that I said just there. Don't worry about it. As long as you stay subscribed to my channel, keep watching these videos. From now on, we're going to get you prepared and ready to go for the upcoming bull cycle. So right now, this is a great time to start looking into the market for entries. We're at a breakout strategy percentage. 90% of the market right now is 90% of the market is bearish breakout, right? They don't think we are going to break out to the upside. They think we're going to continue to the downside. Only 8.3% of the market believes that we've hit a double bottom and that we're going to break out towards the upside and increase to a higher total crypto market cap. This is the epitome of the sign that say when there's blood in the streets, right? That's when you want to go stack your bag. And so right now on the low frequency trend strategy, we are at a 86% bearish, 14% bullish. Okay, on the bull to bear, this analysis is really on the long-term trend of things, and it's given us how the market's looking from a macro level on the proportion of coins that's been trading above or below their 60-day exponential moving average. So from the 60-day EMA, we can see that we're at 43% right now. So about 43% of the market are trading below their 60-day EMA. Now, once we get lower into the 20s where we were before, but we have increased a little bit. We're still here. And this is probably why, people are thinking that this could potentially continue to break down because, we're at the 43% mark. Now, this doesn't mean it's an indicator for good or bad. It's just letting us know that the market is currently trading at 43% below the 60-day moving average. And then so as we continue to get the total crypto market cap, so remember, the total crypto market cap is a plot that shows the growth of the altcoin market and Bitcoin's market cap relative to the total crypto market cap growth, right? So what did I just say there? So basically we have Bitcoin, right? Bitcoin and the Bitcoin market cap, right? And then we have altcoins, everything else that's not Bitcoin. And so they both have two different total market caps. And those are two different things. So this is distinguished in these lines. So we have the orange or yellowish line here that represents the Bitcoin market cap. The green line represents the altcoin market cap, and then the white line represents the combination of both of them together. So really back when if we look back into 2022, all right, and you can see Bitcoin was really trading below the altcoin market cap, right? Bitcoin market cap's at 400, the altcoin market cap at 645 billion, right? So you can see that Bitcoin market cap has been trading below. And it wasn't until just recently that the Bitcoin and the altcoin market cap actually crossed and started getting closer. Bitcoin market cap is increasing, right? So we see Bitcoin market cap at 79 billion, okay, of October 19th, 2023. That was this really the lowest time frame, and that's when we saw the reversal start to happen, really, and that's when the bullish market really started to begin. And then you can see here, you can see the total market cap increasing, all right, and you can see Bitcoin and the altcoin market cap has actually been tailing really close, really tight. Back in 2021, right, you can still see there was a significant difference between the two. When Bitcoin, started trading below the altcoin market cap, right, it's just weird. Everyone was going into altcoins. People weren't as confident as to Bitcoin, right? Things were trading. But now with the ETF, right, with Bitcoin's really starting to be a household name, whether they have being attacked by the SEC and all of the things with Uniswap and consensus and all these things. At the end of the day, Bitcoin is okay. Bitcoin got the green light, and people are okay with buying Bitcoin, trading Bitcoin, holding Bitcoin, and there's really the stigma behind Bitcoin is starting to go on the back seat. And now the altcoins are really taking the front seat on all of the attacks, okay, towards, from the fiat world, the banking and centralized banking, all of that coming into crypto, right? Trying to establish fear and uncertainty and doubt into the marketplace, trying to slow innovation down. And, I'm not here to go into, all of that. They're going to slow innovation down. We knew about it. We knew about it last year. We knew about it when this was created. We've always known this in the space. This is nothing that anybody in this crypto space is unaware of. Everybody knows that there's going to be attacks to this market towards innovation because it signifies change. And people don't really like change, right? But that doesn't stop the fact that there is currently a marketplace that has traded up to $3 trillion, right? Yeah, in the in the finance world and assets under management, all the institutions and all them, $3 trillion to them is nothing, right? But to the retail world, to the regular people, to everyone outside of that, this is massive. Right? And let's not let that go over our heads. Being able to establish a $3 trillion marketplace, okay, within the last decade or so is no small feat. And Larry Fink and institutions has finally decided to say, you know what? We're going to tip our hats to you guys. Everyone in the crypto space, you guys were relentless. You kept going. And at the end of the day, whether or not, it's going to affect their business, you see, those guys at the top, they respect alpha. Alpha respects alpha when they see alpha, right? When you see markets trading for over a decade, and establish itself, right? Never been hacked, right? Never been down, decentralized marketplace, trading, creating opportunity across the globe over 15 years, okay? Up to $3 trillion total market cap. You got to go back and just, put your ego and put your everything to the side and be like, yo, I respect that, okay? And that's exactly what happened. When the ETFs and Larry Fink came out and said, you know what, publicly, we want this asset. Not just because our customers are asking for it, but because at the end of the day, there's a marketplace, there's $3 trillion being traded, and we're not involved. There's no longer, that's not happening anymore, right? They are players of this game. You can say some of them are the creators of this game. They're the OGs of the game, and they've probably been comfortable, right, in their position. They're super, super comfortable in their position. They really don't have any strong competitors. And then all of a sudden, crypto comes out. That just lit a fire in all the investors in the world, all of the institutions in the world. All of a sudden, they have a contender. Okay, somebody's back in the ring. Okay, and at the end of the day, these guys that love playing this game, they want that contender. They want this competition. They want this marketplace. They want to feel alive again. All right. And crypto and Web3 brings them back to the olden days when their markets were first getting started, when they were raising funds and trading and when the internet first started and there were opportunities here and opportunities there, innovation here, innovation there. They were taking bets and, they were in the game. Okay. They weren't just sitting back, just letting money sit, collecting their dividends and their yield now, right? Back then, they had to make strong decisions and they weren't too sure how well these companies were going to do. That's been gone, okay? Before Bitcoin and before the altcoin marketplace, that was gone. They had the stock market. They mastered the stock market. So this is why this marketplace will exist. This marketplace is not going anywhere because it has attracted the major players of this world, and you'll be crazy to think that these players are all of a sudden just going to stop playing this game. The world of trading has been in existence since the horse and buggy. Okay, these guys, these girls, these institutions, these investors, they love the game of trading. They love the game of finance. They love the ability to be ahead of the curve. All right. And the one thing about Web3 and blockchain technology is that this isn't the end. These are layer zeros. This is the beginning. This is technology protocols. These aren't businesses yet. Okay? The Web3 businesses, right? The Apples of Web3, the Microsoft of Web3, the Metas and the Amazons and the Teslas, the Nvidias, all of these of Web3, they do not exist yet. Okay? Those businesses haven't been created yet. They will work on top of all of this technology that's being built on right now. Ethereum is a technology protocol. Polygon is a technology protocol. Solana is a technology protocol. MetaMask is an informational blockchain tool. Okay? Phantom is an informational blockchain tool. Okay? All of these decentralized applications are just layer 1s and layer 2 tools. These are all technologies. So the businesses that will use these technologies in the future, all right, that's where they can come in and say, oh, they're operating and making revenue, and this is the security, blah, blah, blah. This is all technology protocols. This is not securities. These shouldn't even exist under the SEC, and anything that they're being sued after right now is craziness, okay? You're talking about the equivalency of them suing MetaMask and Consensus right now is the same thing as trying to sue a contractor that works for Verizon, a contractor that works for AT&T, a contractor that works for Xfinity. Those individuals invest in themselves, okay? They buy equipment, they buy a truck, they buy equipment, and they get trained, they get cable, all right? And they work as a third-party contractor, and then whenever there's issues, they go out to the customers and they work on the lines, they work on the towers, they support the wireless network, okay? The same thing is with Web3. MetaMask is just an informational tool, okay? It's not a broker, all right? Anyone, proof of stake, anyone that buys or sets up a validator, it is not an investment, okay? It is not an investment tool. You're not just putting money into it and all of a sudden you're like, oh, I expect returns. No, you have to get a computer. You have to buy equipment. You have to set up the infrastructure to secure the blockchain. And you are a validator. You are being hired by the protocol itself. You are not getting, and you are not investing in a developer. You're not investing in a team. You're not investing in nothing. You're investing in yourself. Okay, you are investing in yourself. You are buying equipment to secure the blockchain, and the protocol is hiring you to do that. That is what this space is about. Okay, there are no third parties, there are no permission. If you want to use proof of stake, you need to set up certain equipment to run a validator. And if you're running a validator and you are securing the blockchain, you are essentially being paid for the service that you provide. Okay, you are being paid for a service you provide, okay, as a validator. That is not an investor. An investor is somebody that puts their money in and they walk away and they're not even doing anything, okay? But if they were hired as an employee for the business, okay, they wouldn't be called an investor. No, they would be called an employee. Okay, so two different terminologies, and they're trying to confuse everybody, and that's not what this space is all about right now, okay? This is what I know. But anyway, so back into it. Bitcoin versus altcoin season. So this is really going to give us where we're at right now. Okay, this indicator compares the cumulative of the returns of altcoins relative to Bitcoin, and then we're going to identify whether we're in Bitcoin season or altcoin season. And you can see we still are in Bitcoin season. Altcoin season hasn't arrived yet. Usually, I believe altcoin season begins when we start to get out of Bitcoin season here at the beginning, not when we're in the green, okay? When we're in the green, that means like we're really in altcoin season. We probably have a few more weeks or months or so left before it's about to change, okay? You can see here, okay, back in July, really here July, beginning of July, we were just getting out of Bitcoin season. People were starting to transition, and then, you know, altcoin season really went heavy back in 2022 there over there. So that was that, okay? And this is just really going into volatility, but we're not going to handle all of that right now. So currently, we're going to see what's going on with all the sectors in this space right now. Exchange-based tokens are currently up. I mean, even though, I mean, the top sector gains, let's just see. The top sector gains right now are really layer ones, okay? Layer ones, DeFi, infrastructure plays, Web3, then derivatives, and then gaming, okay? Layer ones right now, 8.4% increase throughout the entire sector, okay? DeFi, 4.6 increase. You can see Aerodrome right here. That is actually Coinbase's decentralized exchange. A new DEX that has come out. We also seen a nice infrastructure play here like ENS, and we're seeing an increase of 4.37, really close to DeFi, right? Because they're really kind of similar but still different. Web3 here, 3.8, like with Helium. Helium's really doing fantastic. They're going strong. They were the beginning. They started it all, right, with Helium IoT products. Really, what were the, how you call it? They were the leaders, okay? DePIN didn't exist. DePIN wasn't out there, right? They created an entirely new sector. Helium is an OG. Everybody really, whether you like Helium or you don't like Helium, yo, what they did was bigger than Helium and bigger than IoT, okay? That is something I have to tip my hat off to, right? They established an entirely new sector in this world of Web3. They're real innovators. They're real game changers. Everybody should support Helium no matter what, because they're really are an example of what can happen in Web3 when community comes together. Okay, and then we have gaming at 3.12 and derivatives up there. Okay, so now as we keep moving on, we're gonna go see what's going on the chains right now, right? We're gonna go over TVLs and we're gonna see what's happening. I'm gonna go to some of my favorite scripts here in my library, and we're gonna go over Solana. We're gonna see what's happening on Solana. And then we're going to see what's happening on Helium Mobile, and then maybe a few other things as well. So let me just get this up and running. All right, where's my favorites? Here we go, your favorites. All right, so let's kind of, we can go take a look at Solana DeFi plays right now. I'm going to run the script and run all the queries. Hopefully I have enough to handle it. Okay, so really this is just, I'm running the queries right now so we can have the most up-to-date information on Solana and their current DeFi plays. All right, now, so you can see this is everything that's happening on Solana, right? We have LP Finance, Penguin Finance, Port Finance, Swap programs, Step Finance, Lido, Hubble, MarginFi, Solend, Meteor, Marinade, Wormhole, Jupiter, Miracle, OpenBook, Phoenix, Saber, Serum, Radium. Really, so Radium is the OG when it comes to DeFi on Solana, right? 299,000 in current, what is this, right? So really daily active users, okay? You can see Radium really just has a strong hold over the marketplace for the daily active users, and as they should, right? Radium is a powerful DeFi tool, and really fantastic for the market. And then so as we continue to go down, you can see these are the DeFi transactions per program, right? You can see Radium's at 40%, OpenBook at 37%, and Orca at 11%. Phoenix only at 9%, so everybody else has really got a lot of proving to do. Something happened here on Orca transactions where we had a huge flush there. All right, Radium as well. These are transactions there. Okay, so Saber transactions, that's just more other stuff there. So we're not going to get into all of that. So let me go back here. Now, one of the biggest things that's being talked about right now in the space are Bitcoin runes. Bitcoin runes really is a new addition to the layer 2 for Bitcoin. Okay, so runes is a token standard developed for the Bitcoin blockchain, right? And really it's trying to create and manage the fungible tokens. It uses the UTXO model and the operation return opcode, and it streamlines tokenization process, offering efficiency and simplicity. Now, the challenges posed by this existing protocols is expanding Bitcoin's utility, trying to make it more appealing to a broader audience. Now, here we go. People are going to take this in so many different ways. All I can say to this is that the blockchain is here for planet Earth, and Bitcoin's here for all of us, and it's for all players. It was made to level the playing field. So if people want to use the blockchain for runes, it's not about whether or not you like it or you agree with it, or oh, I gotta stop it, I gotta whatever. That's what an open market is about. Okay, so you can't stop people from wanting to innovate and wanting to create. You can see runes just in the total runes USD fees on million. All right, 64 Bitcoin in rune fees. Okay, total runes right now we're at 52,925. The new runes as of today, 10,496. You can see there was a massive runes here right after the Bitcoin halving, okay? And then we had a nice decrease, but now look, right, we're back up again. So we're starting to see more increase in activity, which is good. All right, so people are using runes, people are making runes, people are trading on this. So if you want to go check out runes in the different explorers, you can go check out Rune Alpha. I think it's really cool. I'll click on it so you guys can see it. RuneAlpha.xyz. I like this one out of all of them when it comes to the explorers. For wallets, we have Xverse, Unisat, Leather, Magic Eden, and the OKX Web3 wallet. Those wallets are used for runes. Now for etching platforms, we have Luminix, Runes Terminal, Bitcoin Rune, RuneMine, Unisat, and some tools, BTC Tool, right, Goldmine, RuneMine, and then here are the trading platforms, right? If you want to purchase some things on a secondary market, we have Magic Eden. Really, Magic Eden is like the number one. We have OKX Web3, Unisat, Oranos Wallet, SAT SX. Okay, so this is what the Rune Alpha looks like for the Explorer page. This is going to give you, some more information on like what's going on the transactional side, right? This is probably super boring to most people, but if you are interested, go to runealpha.xyz. Now, the next thing that I wanted to show you guys, if you're interested in any trading, go check out MargeEX. I'm just testing it out. I don't have a link or anything to it, but you can use this for leverage trading, but I highly, highly do not recommend this at all. I don't have any money in this at all. I'm just testing out actually this platform, but I had it up on my tab and I just wanted to let you guys aware of it. So here we have console. I'm not going to get into that actually, but console is something that we talk about, right? It's a community for the D-Grants for Stacks, right? Other channels, and just helping out in the community. I'm doing a lot of things trying to help out in the community. So we're going to go back to token metrics and we're going to look at the current live prices. We're going to go to indices and then ratings. So while that's loading up, I did want to bring up some news. So let's go to DeFi Llama and we're going to go to Rec. Okay. And then I want to pull up Cointelegraph. I should have had these up before. I'm sorry. So while those are loading, let's go back to token metrics, and we're going to currently look at the live prices in the current market right now. So currently Bitcoin is sitting at 63,146. We are currently down 6.8% in the last 24 hours, and this week we're down 2.69%. Ethereum's at 3,277, at a 400 billion market cap. Ethereum had a nice week, up 3.89%. Tether is a stable coin. BNB has really been a contender, hasn't really seen any, any pullbacks, right? CZ's going through a lot of ish right now. He's got his own problems. He stepped down as a CEO, but BNB is going fine, right? BNB's at $600. They're up 3.02 3%